Ladies and gents, welcome back to a new video. So in this video, I'm going to be talking about order blocks, bullish and bearish order blocks. I'm going to give you a few examples with some boxes, and then I'm going to go onto the actual charts and show you some real life examples which have happened in the market already. So the basics of an order block is when price reaches a support or resistance level and creates some very specific candle patterns. So in this example here, I'm going to use a level of support. So let's imagine we've got down close candle, and we've hit into the support. I'll do a nice little wick there. What we are looking for at this point, after price has hit the support, is the last down close candle to have its high breached and validated by the next candle. So this is essentially what we were looking for. We were looking for the next candle, which would be an up close candle, to breach and close above the high of this last down close candle. So we draw one of these, and let me make it white so you can see it's bullish. So this would be an example of this order block being validated. Now, further confirmations for a bullish order block would be a displacement in price. Without a displacement in price, I would not be looking to take a trade from an order block. Now, what do I mean by a displacement in price? So that would be price moving violently away from that area with some vigor, leaving FVGs, imbalances, and potentially even some short-term lows to wipe out as part of liquidity. So in this example, we have order block and then price moving violently away from the area. Notice I haven't done like very small candles here where price is taking ages to move away from this area. The candles that I drew were nice and thick, and they left some imbalances where you'd see this gap in here. Okay. Now, as far as the opposite side goes, as far as resistance goes and bearish order blocks, I'll just do this here. We'll use this as resistance, and then we'll draw these without the background. This would be an example of a bearish order block being validated. So essentially it's just the opposite of this, but we have an up close candle which gets broken. So the low, this up close candle, gets broken by the next candle after it, the down close candle. And once again, you'd want to see something similar where we have lots of vigor to the downside, lots of big movements and displacement, creating fair value gaps and imbalances. Okay, so that is the basic rundown. Now, how would I personally look to trade this? Ideally, what I would be looking to do was I'd look for this setup, obviously around a area of support or resistance, but I'd want to have a clear and obvious target of buy side or sell side liquidity, just to make sure that the trade is got a higher probability of playing out. So as far as things that I use as support and resistance, once again, FVGs, you've got order blocks already, and then you've got institutional levels and old highs and lows. Okay, so let's get onto an actual example. Let me get rid of all of this, and we'll go up onto the 4-hour time frame. Okay, so this is what's happened in the last few days or so. What we can see here, okay, let me just take price back a bit. What we can see here is we've obviously got prices hit a level of some form of resistance, then we've got price movement down. On the way down, we've created some thick candles, and we've also created an FVG here. Okay, so that's one thing that I would look as resistance or support if it was in a bullish mindset, but because we're in a bearish mindset here, I would use this as resistance. Now, what I would look to happen is an order block to be formed around here. As you can see on the chart, we have this pattern here that I noted before. So we have a push up into that fair value gap, and then what we can see here is we've got this last up close candle. The low of this gets breached by the following down close candle. And then we've got two nice thick candles that follow that. We've got a bit of vigor in our movement downwards. So this here would be classed as an order block for me. So what I'm going to do is I'm just going to use this blue box to mark this order block. Okay. When price moves up into the order block, you can do one of two things. You can either just have the entry here and then stop loss above, or you can look to the lower time frame for confirmation. Now, what I mentioned before is you want to have an obvious downside target. That is exactly what we have here. We've got some relatively equal lows, some sell side liquidity as part of our target. So for me, I'd be looking to just target this low here. Let me get rid of that. Now, dropping onto the 1 hour time frame, we have a move up into an order block. As mentioned, that would be seen as resistance, and this is where you could look to get your entries. Once again, what do we see happening here? We've got our last up close candle, then we've got our down close candle. Let me zoom in a little bit. Our down close candle, which breaches the low and closes below that up close candle. We have some imbalance that gets created in there. So this would be our order block. Okay, as you can see here, we use here you are, using the blue box. Price moves up into that and then shifts down. Once again, we've got a up close candle followed by a down close candle, which breaches the low of this up close candle, and that would be another order block that gets created. So this is just our standard institutional order flow now. See what happens. Price then moves up back into that order block and it starts gunning towards the lows here. Cool overall target here. Now, as far as taking trades, you could do just an entry off here, or you could probably look to the lower time frame. But to be honest, 1 to 4 is good enough. If it's a highly probable trade and you've got a decent enough stop size so that it's at an invalidation point, that is fine. If you wanted to drop down onto the lower time frame, you could probably do so. So let's have a look at this on the lower time frame. We've got a 15-minute chart here. So we have a move up into that order block, into the 1 hour order block. And what do we have here? We've now got a 15-minute order block that gets created. So we've got our last up close candle followed by a down move. Now, if it was me personally looking to take this, I wouldn't necessarily take that because I don't see some displacement to the downside. That's just me personally. But it's technically still sort of valid. I'm just looking at things that would be more highly probable. Okay. So yeah, still technically valid, but I wouldn't personally take it. This, on the other hand, if you look at it on the 5-minute time frame, it looks slightly better. So we have that move up into the hourly order block. Sorry, and on the 5-minute time frame, we have a nice clear movement down after we hit that order block, and we create another one here. So last up close candle where the low gets violated, gets broken, and we have down close candle followed by some displacement to the downside. This to me would be an absolute valid entry, and this is where you could get the stops slightly tighter. And there you go. Slightly changes the risk to reward. If I had a tighter stop like this, I'd be looking to take partials off at more regular intervals. So something like this area here as a partial zone. So that is basics of an order block. Now, once again, I said, what was it? For bullish order block, we would want to see lows or FVGs or order blocks, same sort of thing, but instead of looking for the last up close candle to get violated by a down close, it's just the opposite. So we're looking for the last down close candle to get violated and close above the next up candle, right? So yeah, I think that is the end of the explanation. So if you were to use it in a trading plan, very, very basic trading plan that I could give you would be look at 4-hour time frame, support and resistance, or the daily, then refine to the 1 hour, and then potentially have an entry time frame like the 15-minute, and make sure you take partials. You don't necessarily have to even go onto the 15-minute, but you always want to have a target in mind. Otherwise, it's a pretty baseless trade. Okay, so that is a brief understanding of the order block. If you understood that and you thought it was valuable, drop a like, drop a subscribe. If you need further clarification on that, please let me know in the comments and I would do a follow-up video. But that is the end of the video. I will catch you guys in the next one.